momentum typically begets momentum, doesn't it?
It does. New highs
until
typically.
It doesn't.
Well, until it doesn't, until momentum reverses the other way. And that's no fun either. And it's been a long time since we really remember those lower lows every day. But, yeah, I mean, if you think about it this way, every brand new high we have ever made in history, except for yesterday's, has been succeeded at some point by a higher high. So this is the trend. This will creep up. And these are psychological numbers. And it's great reason to celebrate capitalism, the American way, and the good work and information that comes from CNBC.
So I shouldn't feel bad if I'm a viewer and I say, well, you know, I've had my money in cash. I was worried. I didn't trust this. It's still, with reason, a good time to put money to work if you are going to dollar cost average in,
Sure. I mean, yes, you never want to stop your discipline. So if you have a discipline, you stick with your discipline. My longtime partner, John Washington, said the best time to buy stocks is when you have money, and the best time to sell stocks is when you need money, and otherwise pay no attention to the levels. There's a lot of wisdom, actually, in that, and of just holding through various cycles for the long term and letting your money grow and compound tax deferred.
I want to mention one of the catalysts this week really seems to be the CPI report.
Yes.
A little bit softer than expected, enough for people to be off to the races saying, okay, great, maybe we can have rate cuts after all, or what have you. You've seen bond yields drop. But even today, the market has given up its gains after the Fed's Bowman said she'd still be open to hiking if needed. She's been a hawk. This isn't exactly a news flash, but do you think the Fed's going to try to push back here a little bit and maybe try to say, okay, we need both options open?
Yeah, it's exactly what the Fed's doing through these various jawboning and folks and governors coming and saying we might be open to a raise. Do I really think they're open to a raise? No. What I think they had to do is they had to say they were open to a raise because stocks took off. I saw that number and I saw futures take off and then they pulled back and I said, well, that was just, you know, that was the bots trading. That was the algos that just ran up on. But they've got ahead of itself. And markets have been doing this to the Fed for 2 years now. Every time the Fed comes out and says, look, we're going to be data dependent or we're going to do this or that, fine. And then markets go, oh, no, they're going to cut. Oh, no, we're going to have 7 or 8 cuts this year. No, you're not. The Fed never said it. And then the Fed comes back and
love the Fed because they give us I almost said something else. Stuff to talk about. They give us plenty to talk about. But I want to turn it because we've spent the last year maybe worrying about what the Fed was going to do and what it wasn't going to do. We've been the last worrying about inflation. But now more and more people seem to be worrying about the consumer. Are you?
Sure. You have to worry about the consumer. The main fundamental support for the entire U.S. economy is the consumer. And if you read Home Depot's earnings report that they are seeing smaller tickets and fewer tickets and that consumers are deferring big purchases, a lot because maybe home sales aren't at the same pace and they're going to focus on pro and everything else. You're also seeing this from even the fast food restaurants, some of them saying that consumers aren't spending as much when they go in and they're getting pushback. Are we finally reaching that point where the consumer is running out of wallet? They had a bunch of money on their balance sheets. We know that wages have kept up. But we need to watch this consumer. The strength of the consumer and their ability to spend will dictate whether these companies can continue to have top-line sales. Yeah.
All right.